Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, January 5th, 2024. Wanted to get a quick one out to you because what happened today. And this is when we make our money. Or not, we'll see. But so I fired a post out to you this morning right when we hit T2 on NQ. And what I want to do here, let me center this chart. I'm going to get to a couple of the questions. I answered one regarding this today. Let me just kind of jump there. I may jump back and forth on this because there's some great questions put to me. I just went through the last two posts, the one I got out to you today and the last post from yesterday. Okay, we have this one here. Let me zoom in. By the way, bouncing off 393.66 for less than a minute, 1 hour before the market opens for trading isn't really a solid hit on T2. Blah, blah, blah. Is it? I don't see ish. Am I? Okay. If those of you that followed me a while, and please chime in. I've probably said this literally 1,000 times or more over the years that the two things. Well, let me answer. Let me just read my answer. And this is so yeah, QQQ low a day in pre-market was 393.66. And we could still possibly take another thrust. I mean, of course, anything's possible to get closer to T2, which I had shown at 392.07 on that chart. However, first of all, I often state, and this again, I've probably said thousands of times over the years, the price targets I list on my charts are the actual support level. If it's a short trade, it's going to be a resistance if a long trade, where I'm targeting, although I always recommend to cover slightly above that actual support level in case the buyers step in early. Ditto for longs. If you're long and I'm targeting a resistance of say 100, you don't want to put your sell limit order at 100 if everyone is a well-defined resistance level, because a lot of times the sellers will step in early. So you want to be just shy of that. How much? It's relative to the price of the security, the trading history, the volatility. There's quite a few factors, but just about. All right, so that's that. Second, T2 was hit on NQ. And I often also say this, and probably said it 1,000 times over the years. That's why I both post and follow the index ETFs and futures charts. At any given time, I'm usually trading on my active trading account NQ. I have other accounts I'll use. At times I don't use futures. I'll use the leveraged ETFs or the one-time QQQ or QID, QLD, SQQQ, TQQQ. Those are the 2 and 3 time leverage. Okay, but I do continually post both those charts. And the reason, and I also say that, is I'll typically close or reverse a position when the first of either is hit. And the reason I do that, and I've talked about this a lot, you do have a two universe of traders. Let's just talk one thing. You can talk the S&P 500, you can talk corn, wheat, soybeans. You can talk QQQ, which we're talking about here. So you have a universe of traders that trade ETFs. That's what they do. Whether it's the leveraged ones or the non-leveraged, it's QQQ, we'll call it. And then you have this whole other universe of traders. And I'm in both universes, but typically I'm more futures. And so remember, it's a dog wagging the tail thing, or the tail wagging the dog thing. It doesn't matter, a chicken and the egg. So what happens is, when a certain subset of traders step in other words, typically it's going to be during the pre-market session. The futures tend to rule the roost. There's more liquidity. They're fully liquid, and they're liquid pretty much around the clock. But so that was what happened today. It was right after, which is another thing. I'm going all over the place here. I was watching. The employment numbers came out today. We had an employment report. So it wasn't a random event. It was 8:30. Economic reports came out. Boom, that's what caused the move in the futures. Boom, that's what hit T2. I got it right out to you right away. I screenshotted and got that out quick as possible, that we made a full hit of T2 in the futures. And so therefore, the futures traders stepped in, or you want to call it whatever it was. People were buying the Qs. And so that's what caused the reversal to be just shy of where I had the comparable T2. Remember, here, I'll show you the charts in a second. And then finally, by the way, that was only less than 0.5%. Remember, the QQQ is almost a 400-point security. So that means every 1 point, every $1 it moves from 392 to 393, it's going to be 1/4 right? So basically, we effectively hit within 0.5%. I mean, that's as precise as a guess. So I probably spent a lot of time, but I want to bring that up, and it's important because if you were watching, if you were in front of your computer this morning, 8:30 Eastern time, I'll put on the pre-market deals here, and you saw that. Yeah, that's close enough. And look, you might have been holding, you might have had a stop at, I'm sorry, a buy to cover order. Let's say right here, a little above would be, let's call it 393 and change, and it reversed just shy of that. But at the very same time, and again, these futures charts are free, even if you do not trade futures. And this I often say, and you don't have a futures account. Investing.com has free real-time futures charts. If you have Thinkorswim platform, formerly Ameritrade, it's now Schwab. Schwab bought Ameritrade recently. It's you don't even have to be an active trader or have a futures account. I don't believe they give you free real-time streaming charts on futures. So if you had a chart up, you would have seen, hey, I'm a QQQ trader, but wow. That's that very well-defined level. Again, these levels were laid out way back here. That was our first sell signal right there. We hit T1, which was that minor uptrend. Actually, T1 at that time was hit on QQQ. There was another, and I talked about it at that time. At the very point right here, right there, and the futures hit that minor uptrend line. That's when QQQ, right here, hit my first target. And there's another great example. So in this case, the tail that wagged the dog was QQQ. The QQQ buyer stepped in. It was a level I had in advance. It was hit. We hit there. I mentioned it right at the time when it was hit, and that's where the buyer stepped in. We got the bounce, not on NQ. And so that would have been a time, which I did and covered NQ, because QQQ fell to a very, very well-defined uptrend line. It wasn't even a minor. This was a minor trend line. There was a break, sell signal. All right, so I think I probably beat in that point pretty good. And I'm sorry, but it's important to me. It's very important. And again, it holds true with natural gas, crude oil. If you're a SPY trader, you want to watch ES. And if you're an ES trader, you want to watch SPY. Because, again, just two different subsets of traders, and it doesn't matter. And then as I went on to say in there, at the end of the day, why, when you get that close, why milk out? Is it worth the RR is tremendously horrible to try to milk out if you have a strong convictions like I did that we're getting ready to bounce, to try to milk out an extra less than 0.5%, 0.4%, and risk getting caught in a sudden reversal. Because remember, the markets have been getting oversold, especially in the near term. And so, it's nothing huge so far, but when you look at the pre-market reversal, edit chart property, show last two sessions. This is that's exactly where that NQ to the button target was hit. And the ramp so far has been a quick 1%. If you're an active trader, you trade futures, I don't have to tell you how much money even a single contract of NQ puts in your pocket if you get a 1% pop. Of course, it's all relative to the leverage factor and all that stuff, but so it's all kind of watches out. So 1% is 1%. And again, if you're a long-term swing trader, you don't have to worry about this stuff. Nothing's changed longer term. I maintain this is probably the high end of a bear market rally, and you're going to say, well, Randy, how can it be a bear market rally if QQQ wanted to make new highs? Remember, QQQ it's the farthest thing from the stock market. It's just it's a tech index. It's a tech-heavy index. Over 50% of the companies in there. It's, someone on the site's been successfully trading XLK puts lately. XLK is a tech sector ETF, and you can compare, and you will see that if you put it up here, let's just pick this one, replace that. XLK and QQQ are really the same thing. You can trade QQQ. They're almost identical when you put up the charts. There it is. There it is. So that's it. So you're trading a basket of tech stocks, not the stock market. They don't have any financials in there, and that's one of the largest sectors, the S&P 500. It's all tech and biotech mostly, is most of what the Nasdaq is, and some other companies obviously. But all right, so the stock market, the S&P 500. Somebody mentioned in one of the comments today, no one's talking about the double top high, and and I said what I said is they will. We came close. This is SPY, and it's not yet taken out that previous high. So If you want to get all technical on it, you might say, well, if we made a marginal new high, we slightly take that out, then this is not a bear market rally, it's a new bull market. It's semantics, really, guys. It's, this is looking like setting up to be what, well, I agree, big giant double top. And my reply to that question is, the bobbleheads on TV will be talking about if and when you start to get rejected. If in number one we get rejected, but you start to walk away, and then it becomes apparent to the masses, meaning the majority out there, that this was indeed a double top. And then you have the other, even, remember, that's even a cap weighted index. It's not representative of the economy or the entire stock market. S&P 500 does a better job of representing the stock market than QQQ, but it's still not at all representative because it's only the 500 largest mega cap companies. And even then it has the same overweighting because it's a cap weighted index. So those larger mega cap, Apple, Microsoft, the Mag 7, they have an outsized weighting or impact. I've always said you want an ETF that's going to probably be the closest thing to the stock market. It's the one that tracks formerly what was known as the Wilshire 5000. I'm queuing it up. It's VTI, and that's the Vanguard Total Stock Market ETF. Tracks the CRSP US Total Market Index, which represents approximately 100% of the investable U.S. stock market and includes large, mid, small, and micro caps stocks. So it's got them all in there pretty much. And again, it's gonna kind of does a little proxy. Can't hold them all, but it that's what it's tracking via derivatives and other things out there. And you can see that's still off its highs, and you could make a marginal new high, and then you would say, but again, right now we have these sell signals. That's we'll go down history as a 2024 drop. And again, I made the case, I put out that post this morning. I was careful with my words and very deliberate on the post I got out to you today, saying the odds for a tradable bounce I would put as likely to highly likely. I usually don't put that. That just shows my conviction how strong I think we will bounce off that level. And so translation to me, hard long, cover shorts, hard long, and how far? Well, you see my arrows, a little arrow break there. And then there was a question on here as well. Somebody said, yes, Randy, are the targets for QQQ the same as in your post yesterday? Yes, 404 is my current preferred bounce target. I would put very good odds on it being hit soon. Max potential target of 409 with another around 407.50. Let me get you those levels right now. Again, they're covered in recent videos, but I'll do it again. That's you can see best on the 15-minute chart when you go down here. Again, this one doesn't show the pre-market trades. Shows that pretty much an equal, slightly lower low in the regular session. Divergent low still. Same divergence we've had, stronger. And so you can see the targets right here, resistance levels where I think reactions are likely. That's 400.33, QQQ 433. A couple reactions, I think. So this is how I would expect this rally to go. You got a little bit right here in front of you, about 398.72. So when they pop that, which I think they will, and they'll do it today, come up to 433, probably have a reaction there. Coming off where we're at, I don't think I plan to trade any reactions along the way. In other words, just push the longs. I have a little minor level there, and it's at 402.80. Let me turn it up for you, because again, these are levels where they're resistance levels where I think reactions, the odds are decent. And I always say the charts are dynamic, and so is my analysis. What does that mean? Well, it means dynamic is constantly evolving. So I can only say at the time as we approach 402.80, depending on how QQQ looks, how NQ looks, how the various time frames I look at, 1 minute, 5 minute, 15 minute, 60 minute, how the Mag 7 look. I take all that into account and then say, okay, based on what I'm seeing Apple and Microsoft and NVIDIA all running up and running into resistance too at the same time. So therefore, I think they'll step in and sell those stocks, and that'll bring the index down. Then we might get that's a for example. But to keep it very simple. And that's what I call micro analysis. I don't know if anyone else does get so granular as I do. I don't know. I don't follow anyone else as far as trading goes. But that's how it looks. But a simple swing target, like set it, forget it. I'm a big proponent of those OCO orders. That means one cancels the other. All brokers offer them. Sometimes they call them OCAs. One cancels another. Set and forget would be, so the resistance is on QQQ 40707. So you'd want to be, have a sell limit order slightly below there with a stop loss order below today's lows. At this point, somewhere around there. And I even mentioned we may do another jog down on QQQ because we haven't had a full tag. Just because we bounced off NQ, the second target, doesn't mean we can't have one more flush out move today. I could easily see that. So I think a stop should be on a 60-minute close below 392, I think would be an objective stop. So whether you're long now, whether we have another thrust down, I don't favor it, but I could certainly see it. Sometimes that happens. Sometimes you bounce off the first one, like the futures hit, support today. But NQ traders are really wanting to see that 392 hit. It's again, it's a comparable level, but the futures, remember, are going to trade. When I say comparable, the futures have a premium built in because they are just that. They're futures. Where traders are guessing based on the March contract. I think that's what we're at right now, right? NQ, yeah, we're on the Marches. And you could buy, if you wanted, you can buy the next 3 months out. You can buy whatever futures contract you want. The March contract's the most liquid. But if you bought the, April, May, June's, they're going to be at a different price than the March contract. So I'm probably getting a little off topic here, but that's just how futures work. Let me get to everything else. Apple, somebody made a comment about Apple, and I said, on this one, there's the chart. Let me turn off the after hour. Well, you can see there's that level. Remember yesterday in the video, I said, look, this is where I put it on as an official long trade right here, and I said I could easily see because of what just happened today, because there's another about 1% or so downside in QQQ to my targets. Again, this is what I was covering yesterday, that I could see us coming down here to about the 180 level, which is the next support on Apple, and that's what happened in pre-market. Now, if you don't trade pre-market, it didn't happen to you in the regular session, so for all intents and purposes, it never happened. Those are the white candles. Those are the pre-market trades. So this is where we closed yesterday. So, and this one technically then in the regular session never went underwater. We've stayed positive we entered right there. And now that we've hit that extra level, it did a good flush out move. I'm pretty super bullish right now on the indexes near term, looking for a bounce. But that hasn't changed my longer term outlook. There, Apple, where does it go? Well, I already gave you targets yesterday, 187.17, just shy of that. But I also have a second. I'll do it right now. I'll make it official. This is a minimum target, 187-ish, we call it. And then this is and I probably covered this in yesterday's video, second potential target. You have, there's two. The downtrend line is going to come in a little lower if and when we get there to that first target. I think I covered that yesterday. This is how the charts go. They're dynamic. And so Apple probably, I think, will rock today pretty hard in the market. And I think Apple will probably hit that target today. That's only almost 3%. So I pretty much baked in the cake unless something happens here. And then go up, and there's that gap. What I was getting at, if we blast through 187, it may want to keep going. Like I said, Apple's a crowd favorite. And I think I said it in the video yesterday. Again, I'm just speaking kind of in someone else's shoes, that if you are that bull, the guy or gal in the last couple of weeks that were, wanting to get, long and think we're going to have a great year and market's going to go a lot higher. For the life of me, I can't understand who wouldn't buy a 10% drop. Apple it's the biggest drop we've had in years. So, and I know there's a lot of folks that always say they're going to buy the next big pullback or the next big, pullback to support when they want to get long stocks. But then when things are falling, they don't want to buy it. Everyone gets bearish. The pundits on TV get bearish. They're not bearish here. They start talking why Apple's a sell right here. It's almost, you almost have to just take everything they say and do the opposite, not for the sake of being contrary, but that's it. So, and look, and I pointed this out yesterday, all these these drops down to the oversold level, and in just about every instance, they were good for at least double-digit bounces. So I'm just giving you some near-term targets. It wouldn't surprise me at all if we go past there. It certainly wouldn't shock me. But if we get up to that 192, and let's just say again, I do this day in, day out. I'll let you know my thoughts if and when we start to climb, how much more upside this. That's about a 6% rally for Apple to mount. To the previous highs, it's right at about 10%. So if Apple wanted to put in a triple top here, this is a 60-minute chart, but you have this high here was a divergent high, correction. Ended with a divergent low, rally, divergent high, correction. It's not really see, I'm not crazy about this. It's got some little bit of a divergence, so I'm just looking for that jog up, and this is probably the high on Apple is what I would suspect. And again, that's, if you missed it, I've done quite a few videos. I didn't take a vacation this year like I usually do. I've been around, so I've been putting out videos. And it's these weekly and daily charts I go out to that tell me that that 2024 is going to be most likely very ugly, and these are longer term targets. It's a weekly chart, and probably now that it's gone down 10%, I'm sure a lot of people are jumping on the bear train on Apple. But I've maintained all along, including recent videos, and we were right up here at the highs, that we're probably going to drop. Apple's going to go down before all is said and done about 46%, and I'm willing to bet I'm probably one of the few out there that would even dare. That's heresy among Apple bulls, calling for the stock to get chopped in half, and it's not going to happen today, tomorrow, next week. But I think it will happen in 2024 or 2025. All right. Here's the good news on that, or what I find is good news. Guess what? If I'm wrong and Apple's going to the moon, or it's going up 40% before it drops 40%, I'm not going to be short the whole time. In fact, I'm long right now. So it's just, it's kind of, I don't want to say moot. It's just helping formulate my bigger picture. And you can't get crazy bearish on the market or Apple until the purple lines gets taken out. Remember, that's key. That's the weekly chart there. Daily chart, I have the purple lines down here. So until this happens, that prediction of a 40-something% drop in Apple and QQQ and the stock market and everything else, my convictions haven't been and won't be at very high until that happens. Again, that's where I put probabilities is very high. Like I put the probability on a bounce today is very high. Alrighty. Hopefully that all makes sense. What else should I cover for you? Just talk on the euro, and pardon if you hear all the drills and everything going on. I still have a lot of construction things going on in the house, so there's some guys putting in electrical. It's actually outside the house, but I can hear it coming in the office here. Hopefully you don't pick it up on the mic. This is the euro. So today you had let me go back to the charts here. Remember, there's the economic calendar. You can access that through right side of the chart. This is employment situation came in today. The consensus was for month-over-month increase of non-farm payrolls, of 164. It came in hot, 216. Unemployment rate, consensus 3.8. Came in even better at 3.7. Private payrolls, consensus was for an increase of 127,000. We got 164. So you would think, now that means the economy's hot. That means that Fed has a much instantly. You would think the odds of the March rate cut and the 6 rate cuts that the market's calling for would drop, right? Why is the Fed, if the job market's strong, going to start cutting rates? But yet the euro did the opposite. So one would think on that logic, unless if I'm missing, I might be missing something. Tell me if I am, guys. That the dollar would instantly rally, which means the euro would drop. But the opposite happened. And again, this is where the charts. Well, it just probably is baffling so many Forex traders today. You can see this is my first target zone right here, euro US dollar. We put in a divergent low. We hit it at the bottom of the zone twice. And this morning it wasn't doing much until after. There it is. There's the spike down. So that was what everyone thought. Okay, jobs numbers are hot. That means the Fed's chances of a rate cut go down. What does that mean? Why does a dollar normally would go up because we're going to keep our rates high. Remember, the dollar, if you don't know this, the US dollar is all it is. It's not a thing in itself. The dollar is based. It's relative to other currencies. What gives it its worth and what makes the U.S. dollar go up and down in value, because it's the U.S. dollar index, which is comprised of, I think it's 62.8% is the euro, 23 point something is the yen, and then, so that's right there, most of it. And so what makes the dollar go up and down is how it's moving against those other currencies. So if we have higher interest rates, or we're expected to keep our rates higher, raise them above the eurozone, the ECB, that makes the dollar strong. So, but the opposite happened today, and again, it's in the charts. So one would think, as it initially did, the dollar went down, but then the reversal here. And so that's why the stock market's rallying, because I said that gold, silver, and stocks go up and down with this, the euro, which is inverse to the dollar. So when you see this rising, that means the euro is going up against the dollar and the dollar is falling against the euro. And this is what makes, you can, like I said, trade this alone, blindfold me and trade the index. So we've had these divergences, they're playing out. Now we're coming up to resistance. Coming up to resistance in QQQ. Yep, there it is. There's that 398.72 first resistance level hit. This is where you get a reaction. If you want to book profits, if you bought this morning's low, you made over 1% on NQ, you could turn around and sell it now. Buy it back probably at a lower price. That's all day long. That's a reaction. I define a reaction as either a pause, a reversal off a resistance level, or a consolidation. So far, clearly a reaction. So, okay, guys, that's that. I think it's just going to be easier if I do everything else separately. There's updates on the other stuff. I keep updating natural gas, crude, wheat, treasury bonds. I'll cover those in a separate update. So that's it. We hit really the minimum and initial resistance level. If we get more than just a minor reaction here, then any move down to that 390, what was it, 390, 392-ish level on QQQ, that's still support. And that would be a nice head fake move for the longs that jumped in today. So like I said, I would have a stop a little bit below there if you're going to game the bounce trade. And I speak to the longer term trader whose head is spinning right now. Randy, you're saying this, that, long, short here. I can't keep up anymore. This weekly chart speaks volumes to me. So if you shorted any of these recent sell signals, and you're not an active trader, it's not in your wheelhouse, you work a full-time job, you just don't have the time or inclination to sit at the desk all day, in my opinion, anyone that took the recent sell signals we had, including the big one on Friday when we finally had the trendline break, I think that has the potential to be the best shorting up in years, if not decades. The potential. Don't want to get ahead of myself. Purple levels still have to go on QQQ and or all the Mag 7 stocks. But in other words, if you shorted here, you can set a stop wherever your stop is, depending on where you're targeting. These are just an intermediate term targets on the daily chart, and then set it and forget it, and not try and game all these little counter trend bounces again if it's not your wheelhouse. Because what's likely to happen, you get out of your short position, you go long, and all of a sudden they sell into the rally as it looks good. And then what happens is you end up not getting back in, or they don't give you a favorable price. But I'm going to wrap the video up. So that's what I think happens. Mike, you guys have been hearing for 2 days now what I think happens. To get a little snapback rally here. The dip buyers do what they do. They come in, they buy Apple and everything else, and then we get a rally. And this is what I'll really be looking for. If we go up to new highs, like I said, it's not going to change the technical posture, and it won't change my longer to intermediate term outlook. Near term, there might be something else going on. Like I said, I can't be dismissive of Apple hitting that 70 level on the RSI, and some other things that I saw recently. So like I said, if we are in a bull market if 2024 is going to be a good year in the market, then this is probably what Apple's going to do. I don't think that's going to be the case, but looking at this, looking at what the stock did the last couple times that it hit this level, we had these pretty nice rallies. But I think if we run our course on the bear market rally, which I suspect we probably have, then this will be you just got what we call bull bait, and they'll start buying it here, and there's a big gap, and the Apple will ideally for the bear case should not exceed. This is the gap right here. Really should in a downtrend line. It would be ideal to see for the bear case a rejection. Especially if we get a rally. I'd like to see the rally. I'd like to see some short interest and bearish sentiment cleared out, suck in some more longs, and then see the lows get taken out in the 200-day moving averages. And then, of course, my purple lines. So we've got quite a way to go just to get down to those purple lines on Apple. That's the lowest one's at 166.60. And that's going to be about a 9% drop, rough almost, just to get us there. So we really need to drop about 10% to put the nail in the coffin on Apple. But again, it's not just Apple. And then we have to do 311.50 on Microsoft, 121 and change on Alphabet, Amazon, 123. Although these lines could change because, they've already been hit and checked once. So I may redo those if we start moving lower. There's that uptrend line on Amazon that's purple, very important to me, and it's going to come in much higher than 123. 123, remember, those were my lights out numbers for back here. And I let Amazon violate it because of everything I covered at the time, thinking this would be a whipsaw, and the rest of the Mag 7 had not violated. In fact, they successfully tested and held their levels. I will wrap up here. This has been Randy Finney with Right Side of the Chart. Have a great day.